Right, who wouldn't want to talk about property politics and economics on a Tuesday evening? So let's go. But you've all lived through possession, pets, goodness knows what else. So we're into the however many P's we can do tonight. I'm not great at talking through my slides, but this just for those people that like to read, there is a bit of an agenda to this. I always like to look at what happened, and then what's happening now, and then have a little look to where we think we might go for the future. So that's what we're going to be up to. Just as with Maxine and Steph, more than happy. If you want to ask some questions, love answering those. If you think about them tomorrow morning, just send them through to these fabulous ladies and gentlemen, and I'll get those answered for you. So, right, we're going to flick through the next ones real fast because it's about what last year is. And everybody, I always think, geez, if I was sitting there and I was here last year, the first thing I'd go is, was she right? Because I'm not going to stay if she's not. So let's go on to the next one and have a little look. So, and you can check all of this out. But one of the things when people are presenting data, and particularly when you're hearing it in the media, it is really, really rubbish. And the reason is because what you get is what's happening now and whether that's up or down year on year. Fat lot of use that is to anybody, and particularly as investors, you're probably investing for 10, 15, 20 years, so who cares? So the only data that I think is useful is if you understand historically what's happened. And with property, you've got to understand the economic bit to understand what's driving the property side of it. And these are the four things. So inflation rate, historically, was about 3%. And 2025, so I think it was last year I was here, we expected the forecast for 2 to 3.3%. It was on the slightly higher side. It actually came out as 3.4. Now, as you run through each of those, people are, unless you're sort of Maxine and my age, Steph maybe not, but interest rate wise, everybody thinks that, oh my God, they're 3.75, this is a disaster. And we're going, geez, we don't know. We used to be 6 mostly, but hey, we were living through 15%, which was even more scary. But fortunately, better handle on the economy. But it did come out, we thought 3.75 to 4, it came about the same. Wages slightly higher, which was good news. And mortgage rates were the norm, but again, slightly higher in the forecast. So we're not too bad in getting these things right. They're not my forecast, by the way. I steal them from other people and give you an average. That's how it works, and it seems to have worked so far. And then when you look at the prices, they were slightly down last year, and certainly for the whole of 25, they didn't perform as well on the price side. Rents bang on, and on the transaction, the historic should say 1.2 million on that, and the actual we did was about 1.2, so that was fine. Now, the interesting thing with those stats, and you'll see them when we do what's happening now, is the reason why those prices are not doing so well is because that interest rate, albeit the norm is 6, people aren't used to that at all. They're more used to 1 or 2% rates. And that is driving a bit of an affordability issue, particularly down south. So people cannot pay as much as they would normally for, and we're not seeing the price growth that we've done in the past. So forecasts aren't bad. They're at least worth listening to. So when we come to them. So on to the next one. And off the back of this, we were saying the economic forecast is looking good, as long as inflation remains around 2 or 3%. Well, we'll come on to that in a minute. Base rates could fall to 3% in 2026. Whoop, whoop, that's good news. And property prices and rents are expected to grow in line with wages, which is about 4%, so slightly above inflation. That's good. Buy-to-let can still deliver a good investment return, but you need to really understand this stuff. So I do the economic, the financial in there and those kind of bits, but I cannot do what Max, Steph and Matty and the team do because I don't know your local market, and you'll see that in this presentation here. So that's basically what we said would happen. So I didn't think we did too badly. This was the advice I gave to landlords on the next one. And it was basically know your property and portfolio, be really clear about your investment objectives. Most people, when they come to me, which is partly why I don't do it anymore, they go, what do you think of this deal, Kate? And I'm going, I don't know. Are you married? Have you got a mirror will? Have you got kids? Do you want goes off with someone else? Because that's what's important to me. So you must be clear on your investment objectives, your timescales, what risk you can have. You've got to make sure you work with somebody that's an independent financial advisor, because although it's property, it is financial advice, and you've got to work with the best agent that you can. Can I think of any? Oh yeah, might be Maxine. Putting her hands up already. I love that enthusiasm. But that is super important, and hopefully everything I come on and I was offered, you don't need to come on till later on, Kate, because da-da. And I went, no. And I kind of said, I felt that would be rude, but actually, sneakily, I always learn something when Maxine and Stefan and Matt are around. So that's why I came on, and I picked up a few things. And I even thought, I better check my rent's been going in since the start of the year. So forgive me for looking at my phone. I think it has, but I better go and double check. I can't hear you for some reason, Steph.
I muted myself. I said, if you need to book a call, where you need to go.
Would anybody notice if I booked a consultation? I could put it under Wizard's name, couldn't I? Wizard Faulkner, my Dalmatian. And you can survive, but you've really got to be doing the right thing. And it isn't the easy job it was, the armchair investor stuff from before. So that's kind of where we were. So hopefully what you'll see with all this, and the reason for putting it up, is nothing has changed on this last slide. But hopefully what you can see is both between Maxine and the team and myself, we're trying to make sure it's much, much easier to access all of this information so that you can make the right decisions. So on to the next one. And the next one, because that was just a holding slide. There we go. So 2026, my word, how did we get to the end of June for starters? Because that happened real fast. And economically, it was all going swimmingly. And I feel a bit sorry for Mr. Starmer, because quite frankly, if it hadn't been for the Iran-US war, actually everything, and indeed all of the figures, are looking pretty good. So it's all going well. And then Trump turns up and starts invading Iran, which has kind of gone horribly wrong. The problem with that is it's increased energy costs. That drives up inflation. That's bad news, because right at the start of this, there were reports that the interest rates would go to 4.5%. Bad news for mortgages. That would have made it more unaffordable for people to buy. So the market was going to be in a little bit of trouble this year. Now, in actual fact, if you'd waited for 3 days before anybody reported what was actually happening to interest rates, the Bank of England came out very fast and said, can you just all stop panicking? And can you all stop scaremongering anybody? Can we point out that this is not 2022? We're not seeing a lot of the economic issues that we had there that was causing the high inflation rate that we had. As a result, they kind of indicated they would prefer to see things stick as they were, or they might rise up to around 4%. Fortunately, we're still at 3.75, and hopefully that'll stay at that, if not even reduce. But the mortgage rates, interestingly, are starting to reduce, and that I'm calling the Iran-US thing a truce at the moment, because I don't think we can call it. I've never seen a non-agreement signed in all my life where they still keep fighting each other. And the big thing that's really interesting is we have got more properties for sale, and I'm not talking a few properties for sale. We're talking 14%, 1/4 more than we've ever had in the last decade. Huge numbers of properties coming onto the market. And it's had a weird effect, because despite the fact the economy doesn't really support 1.2 million sales at the moment, we're still meeting that, if not slightly beating it at the moment, for the simple reason that put lots more stock on the market and people go, I really like that house, I'm going to have it. And we see more people move. So it's been quite an interesting time from that perspective. If we pop on to the next one. Now, the other thing, and I just almost have to get this off the chest, so forgive me for doing this, but if I hear anybody else saying this government isn't doing anything, I really will pop my top, because most of us who are working with the government are absolutely and utterly exhausted because they are doing so much. It's just that nobody seems to notice, and the media don't seem to want to tell anybody. And in property, apart from the fact that I appreciate Renters' Rights Act's been quite hard on everybody, but actually talking to good agents and talking to people like Maxine, what we are finding is they're saying, do you know what? It's an awful lot clearer. Yes, it's more complicated. Yes, you've got to do a lot more tick boxing and be a lot more careful, but it's a lot clearer. And I think that is good news and will be good news in the end. The second thing is you've got Making Tax Digital. I know we're talking about that later. I love that because I've got to go ahead and do that. I've got to stop my spreadsheets. Well, that's probably not a bad thing. I'll capture a few more receipts and things like that. But it's actually here. We've been waiting it for about 5-6 years or something like that. You have got the tax changes and things are going up. Hopefully that will mean you're not going to get charged on capital gains that you make in line with income tax. But Andy Burnham is likely to come in and we know that he quite likes that. The leasehold reform, so hands up if you've got a flat. My word, the stuff that's going on that is huge, hugely beneficial. So definitely worth hanging in there if you've got a flat at this moment in time. And the one for me, I've actually been working on this for 8 years with well over 200 experts in the market. But just over a week ago, we got all of the things that we wanted to see, probably and more, from the government in terms of announcing major reform of how to buy or sell a home. And we are going to transform how it works, and it is going to make your life a lot easier, which is nice, and I look forward to that day. And we are talking a few years down the line, but it's happening, and we don't necessarily need the government to make some of the changes they do. The industry wants this, so it's going forward. Big thing everybody's missed. Huge changes to the Planning and Infrastructure Act that's gone through. There are 7 new towns, which are expected to deliver 200,000 new homes. The one near to you is one down in Bedford, where they're looking at about 40,000 new homes coming in there. Now, if there's anybody that's used to new homes, it's you guys. Live in a little village like mine, it's not so popular, but there are more coming and we do need them. So there is a huge amount going on. And if you have got a flat, by the way, they've also introduced a new leasehold toolkit. So if you want to know anything about it or you're thinking of buying one, do go and have a read of that first. Government write very, very good guides and things. So do see that. So they have been super busy, and this isn't everything they've been up to. So lots going on, and you must keep up to date yourself, because I'm afraid the media won't do that for you, or indeed just stay in touch with Maxine and she'll let you know everything that's happening. So what's happening next? No idea, because I can't remember what I did on my slides. So let's have a look at the next one. Oh, I know. Let's have a look at what's happening economically. So going back to the slide that the stats that you had before, you've seen everything on the left-hand side. Currently, we're in this really weird situation. It's like being in the eye of a storm, if you like. We've gone through that stormy bit the last few months, and inflation was expected to rise, but of course it hasn't. And the big reason it's down at 2.8%, which is lower than the long-term average, is purely because there was a big cut in utility bills. Unfortunately, as of tomorrow, that goes back up again, and that will add another 0.7% onto the top of the inflation. So that's going to go back up to about 3.5%. So I think that forecast that we've got for 26 is probably about right. Interest rates, I'm really hoping they're going to stay at 3.75. If I was to put a forecast on it, that's what I would say, but they might go up to 4%. If I was to tell you what I wish for, it was that they come down to 3.5%, but not everything. Kate doesn't get everything she wants, so there we go. Wages, they're still rising, but they're probably not going to rise as much as they have in the past. We've got not just a cost of living crisis, cost of doing business crisis, and to be honest, there's also even a cost of delivering public service crisis. So it's tough at this moment in time. And mortgage rates, they are somewhat above their norm, if you like, but we're hoping that they should come down, and we've already seen them falling, as I mentioned, over the last few months. We're expecting price-wise 2.5% to 5%, but that probably depends whether you've got a flat or a house, because there is huge difference in the trends in those. Rents, they are pretty stable. They always move in line with wages, not inflation, not anything else. And transaction-wise, we're doing quite well versus the historic. So despite the fact that we haven't got the greatest of markets, as I said, transactions are still happening and still keeping the market going. And that's good for the economy, which is good news. So actually, we're not in a bad place at all. But we are hoping it will get slightly better as soon as Mr. Trump disappears, or at least stops frightening the living daylights out of the rest of the world and causing economic problems. But there's only so much I can control. So next one. So let's have a little look how this is all impacting property prices for you, because that's the bit that's important. Now, this is land registry data, so it is about 8 months out of date. So you will always have to talk to an agent, and I know Maxine knows these numbers like the back of her hand. And what you can see here is on the left, you've got the latest data. So you can see that Peterborough's great value for money, Huntingdon's a little bit more expensive, Cambridge, as we all know, those are pretty much London prices. Now, you start looking at the year-on-year stuff, and this is starting to get quite interesting, because it's a gaping hole that you can see with Cambridge, where they're looking at year-on-year prices being down. I think that's less of a worry, or less of an issue, or hiding an opportunity, because what nobody's been doing is working out, well, what happened since prices rose to their peak in 2022, just before Liz Truss came in and kind of upset everything, especially the property market. So what you've got here is you can actually see that literally over the last 4 years, pretty much everywhere is doing quite well. But you hit anywhere like the east of England, the south, the north, down in London, where mortgage rates are having a higher impact because the prices are higher, what we're seeing is a real drag. So Cambridge, for example, is really not doing so well. Doesn't really matter if you're investing, because you just hang on to it, you just keep going. And that's, for example, I'll tell you, I was going to sell my current home this year, but I've decided not to. Too many others on the market. I don't have to sell, so I'm not, and I'm going to wait till next year. But the whole thing with this is you've got to look at all of this and say, well, is that the important thing as an investor is ask yourself the question, is this keeping up with inflation? This is the sort of thing that Maxine and her team understand, and that's why that landlord advisory service is a real neat little service to grab if you want to carry on doing things yourself. And what I then do is, so you can see, actually, we've not done so well since 2022, but should always go back to 2005. And if you do that, actually, in the main, most properties in around the country, and certainly in the east of England and your areas, they at least keep up with inflation, if not beat it, which is the ideal. But you can see that when you look at how well, if you bought it since 2022, you'll probably think, oh, I'm not sure I should have done this. But the trick is you've got to stay in it. I would not personally, and again, it really depends on your objectives, it really depends on where you're going, what's in your life. So it's a very important one-to-one conversation to have, not just take what Kate's doing that, I'll do the same. But at the moment, if you don't have to sell, I would look at hang on to it. So prices aren't great, they're not running away with each other, but at least long term there is a reassurance. Long term doesn't necessarily predict the future, but you'll see later why I think that there's growth still potential available. So next one, I think that's on to rents. So next slide. So there's no point in me putting up all the data that I have, because Maxine's got far better data than I have, quite frankly. And what you can see is that this is all doing very nicely, and it is ahead of inflation. And that's exactly what you want to be seeing. So for rents to go up like this, that's what you want to see. And it's not you being greedy landlords. I would say that most people don't realise, but housing associations put up their rents in line with inflation plus 0.5 or 1%. The reason they do that is so that they can afford the massive additional costs that everybody is having to pay to look after properties, and it's gone up a lot. So it's really, really important to do that. And the good news is that naturally happens in your area. And if we pop on to the next one, you can see that there are real differences, but I expect in those Peterborough postcodes, you're paying a little bit less for the property, and therefore you're going to get a little bit less rent as a result. And we've got some investment returns on this later on. So this is where you really need some help to have a look to see, well, if you really, really want income, that's not the easiest thing, I don't think, to do all the time, but that's the sort of thing where you need to have some guidance as to what type of property you buy, how much you pay in terms of the rent. You need that devil in the detail. Somebody needs to know the property you're buying and on what road it's on to be able to tell you whether it's a good purchase or not. Or review, you've got a portfolio of 10, should you keep 8, sell 2? What should you look to do? That's the real key to this and the main reason for showing you these stats. So if we move on. These are the average annual average returns, and basically what you can see, which I think this is really interesting. So we're going to go. You went around in 2004, so it starts with this big leap in 2005, and actually it's quite interesting. So you can see that the trend there. If I was kind of put a line across there, yes, there's a slight decline in the annual returns, but of course what everybody forgets is when you go pre-2015. Actually, inflation used to be a lot higher, as we saw before. So you're not going to get bigger. I think everybody still expects the returns that they got in 2020 in 2005, but they forget that you don't necessarily need those returns as high if prices haven't moved as fast as you'd expected. And overall, though we've had a bit of a blip during just after the pandemic, overall we are looking around a 3% now increase every single year, and you've got to cover that. So those are pretty good annual returns from other things that you could have a little look at. But it is important to talk to financial advisors to compare what you're getting through your properties and what you're getting through and what you can get through financial, just because you want to make sure that you're investing your money across a basket of goods, and that you know, if one goes down, the other one stays up, etc. So that's why this stuff is important. It's so you can compare against other things, or indeed compare a property against your average portfolio. And on to the next one. And useful to see this by size, because I think we kind of fell over a little bit, Maxine, didn't we? Because we expected that normally one beds don't deliver at all, but actually in your area they're really cracking. 2 and 3 beds are normally your bed and butter, and indeed a 3-bed comes out. But we weren't expecting the 4 beds to come out like that.
No, not at all, because a majority of 4 beds are what would class as an accidental landlord. It wasn't actually bought as an investment. It's in the family, so therefore the decision has been to rent it. I was actually quite, wow, okay.
Yeah, and part of that is supply. For the simple reason that more people who are at a senior level, we have the same actually up in Lincolnshire where I'm near. Basically, those properties which used to be just accidental and just because they were moving abroad or they were doing something else, actually because detached house prices are seeing the biggest price growth, they can give some really good returns. So if you haven't looked at, if you've got 1, 2 and 3 beds or 2 and 3 beds in your portfolio, definitely worth having a chat with Maxine and everybody about whether you should look at some different property sizes, etc. One of the things I've been doing is I've always wanted to be able to come and talk to you and tell you exactly what's happening in your area. But to do that, we have to read, I think we've got about 30 sources of data, and it's thousands and thousands of pages. Now, when we used to do it before, it used to take us 3 days to a week to analyse. But thanks to the wonderful AI, thanks to a new business partner that really knows how to use it, then we now can find out much, much more. And so we've got area information now. We can pull this up for any area. And what you're looking for, if you're investing, you want to see a growth in demand and ideally supply hanging behind that a little bit, and not on average, if you like, but for individuals, because that's where property gets really clever. It's when you look at the individual purchases that you make or what you're hanging on to. So these are things that is really, really worth knowing about Huntington, and the good news is you've got an increased population, and it's increasing more than other areas, and that's a really kind of thumbs up for it. Means you're getting good natural growth because the number of people that are coming into the area, they all need a roof over their head, and that's definitely what's happening. The thing to bear in mind, though, and I'm not sure we've realised this as much as landlords as we should, we have a massive shift in the growth of older people, and more of them are going to be renting. We're used to doing renting for people who are younger and people in their 20s, but there are people that are selling their property and then they might buy somewhere in Spain and rent near a daughter or son for 6 months. And those trends are there. So if you're renovating, have a little think to yourself about what would it cost to make sure somebody who is in their 70s or 80s could stay in this property, and that's really worth doing. You're really lucky. The economic activity is pretty dynamite. I think that's the only word I can use for where you are. And you've got things like the Alconbury Enterprise Campus, other things that are happening. But it is an absolute powerhouse, Huntingdon, as are the surrounding areas, and it's really should be really reassuring, if you like, to know that. And if we go on to the next one, we've got a few more stats. Owner occupation is high, but private renting is increasing, and I think that will continue. And it's not because there's lots of evil landlords buying up properties, because you're building an awful lot of properties. It's because it is actually a choice for some people, and it makes sense. And partly because of the types of jobs that are available in your area. They're not jobs necessarily where you would move to and you're going to stay in it for the rest of your life. The people that are moving into this area for the types of job, particularly in life sciences and things like that, they'll be doing projects. They'll be here for a couple of years. They might be off to another country for a couple of years, etc. So you've got a really strong private rental sector, and hopefully one that's growing. And you've got new homes coming in. So you've got 20,000 new homes. They are trying to match that. And the recent delivery is positive, probably one of the better ones that I've seen because we can compare these. But so you don't necessarily need to do more, but you are slightly behind. So there's that's what you want. You've got population rising. You've got really good quality tenants who are earning decent money, which should continue. And on top of that, you've got slight delay in the delivery. So it's exactly where you'd want to be. So some just really nice, I think, reassuring things. And it's the sort of thing that we can now monitor over time as well, if something changes in the next year or several years. So really good stuff. And as I say, happy we can put something together on the other areas that you might be interested in. So on to the next one. I think we're nearly there, aren't we? Yeah. Oh, look at that. Last slide. It might be early. There's a miracle. Deserve extra cake at the
All right, Kate. All right. I got it.
So summary and conclusions. The one thing I would say, I think there's some people out there that still think 5-10 years maybe, and Maxim will have a much better view on it than me, is fine. But actually the cost in, the work that you have to do to stay in the market and to do well, and the costs out, I do think buy-to-let is quite a long-term investment and a really good one if you get it right. But just bear that in mind. If you're looking for a quick fix, I'm not sure it's the right place for your money. There are going to be some more to change. You'll heard about rent control. Drives me up the wall, quite frankly, because if you did bring in rent control under all the guises that it is everywhere else, actually your rents would go up more than they are now, which would be bonkers, absolutely bonkers. But there are some people obsessed with getting this through. Tried it in Scotland and they're still trying to go ahead. Scotland's rents went up more than England, Wales and Northern Ireland, which is mad. But that's because actually most landlords are decent. And the problem we have, I think, working together with landlords is that you don't put the rents up every single year by a little amount. And then it's a problem because 5 years later, that tenant wants to move somewhere else and they're accusing landlords of skyrocketing and extortionate rents. And it's not. It's just you were kind of too kind and didn't give those little increments that they need. So capital growth is definitely weak at this moment. But my word, how exciting is that if you're looking to expand your portfolio? And if you have the right property in the area, it's actually not doing too bad. So good properties will always do well. It's just knowing which is the right property on the right road to do. We do need the bank base rate to fall back to 3%, maybe 3.25% for the capital growth of average of 3% that we're used to. Choose any new properties with great care and an awful lot of research, and personally get some help from the experts in your local area. Do review your portfolio. If you haven't done that for the last couple of years, 5 years, even the last year, it's something you should do. And you should be doing it every 6 months to a year as well. What's working now, what will work in the future, because your objectives might have changed as well, of course. For all that we do rib each other quite a lot and can be quite rude about each other sometimes, we've worked with these guys an awful lot. I don't think you can ask for a better, more experienced agent, and I don't say that with any, that I have to, but it's genuinely how I feel. I don't do many of these at all, but I do it for these guys because I know what a grand job they do, and I want to make sure you as their landlords get the very best.
Wow, thank you so much, Kate. I mean, you said you learned something from us. That's amazing stats. And I love AI. So it just really gives you the information. So one question for you. If you had a landlord come to you and say, I want to sell, what would you say?
Hold on.
Yeah.
Yeah, I think it does depend. So it is essentially, And the problem we have, or I think most of the landlords I talk to, is you're often investing in properties because you don't trust financial advisors. And the difficulty with that is actually, as soon as you buy an additional property, you need a financial advisor, you need a tax expert by your side, because essentially it's a business. And in your neck of the woods, you're going to be spending 300,000 or 400,000 on a property. Well, you'd have to have a full business plan to be able to do that and get any money for that. So the thing for me is I'd want to sit down and go, well, why are you selling it? Do you have to sell now? Let's have a look. It might have been an absolute corker and you made a fortune out of it. But you've also, you're going to choose to sell that and it is a second home. What a lot of people don't realise is you're not taxed on the specific property sale. You're taxed on how that's affected by all your finances, your income, your other assets, etc. So this year might be a great year to sell because you've not sold anything else that could mean that you end up paying more tax. But actually, it might be worth waiting for a little bit because prices might pick up, etc. So it's really that independent thing. And that's why I genuinely think I've always wanted landlords to be able to have that extra service that a financial advisor would do. Sit down. What are your objectives? Why are you doing this? Let's make sure your investment's on track, and let's understand when the right time to sell is for you and when the right time to hang on is. And we don't, I think most landlords don't do that enough. And that's what I'm hoping, and I'm sure they'll get out of the extra help from yourselves.
No, absolutely. I mean, we do, they're the sort of questions we ask, but I suppose from our point of view, because we are the letting agent, we have the thing, they go, you've got an ulterior motive. And I'm going, this is how much capital gains tax you're going to pay. Really? That's not my ulterior motive. So.
Yeah, and as we all know, then yes, you could say you have an ulterior motive, but I've known you for a long time, and there's no point. You and I have the complete philosophy, as I know your team does. You do right by your client, and if that means letting them go and saying, look, you've had a blast, go and enjoy your life, and sell up. Then I know that's what you would do, because that's what comes first. And our philosophy is you put the landlord first and you put your clients first. And if that means, because you're not short of getting other properties on, etc., and you can look after them. And I think that's the most important thing.
Got one question in the chat from Howard to say, is equity release a good alternative right now to selling?
It could be. That's it. But I think it is quite complicated. And certainly if you're doing equity release on a buy to let, if that's what you're thinking about, I'm not sure. But there is a great, certainly you've got to go through a broker to do that. And secondly, there's a fantastic resource called the Equity Release Council, who've got lots of information. But it's a great question. And I'm really glad that you've asked that, because that's the sort of thing where that is a huge financial decision. And what I would say is, if you're going to sign up any of your properties, having been somebody that worked with people that were looking to do that, or looking at part exchanging their home, for example, and going into a retirement place, please talk to your family, because otherwise it could be quite a horrible shock. It also, and this is getting a little depressing now, which I didn't want to get us into, but I know we've had a case recently, can cause quite a few problems. So
we're talking about whether to buy or keep or sell. That's where we've also produced our buy or sell calculator, where actually we Yvonne's also put, what about HMO a nightmare? I think that's probably going to be an individual chat, Yvonne, because I am cautious of time now. So again, at the end, there will be a QR code. So if anybody does have any questions, please scan that at the end and you can book a free call with us, and we'll be able to help.
Yeah, and if there's anything I need to help with, as I say, any questions you've got, I'm not just disappearing after tonight. So
thank you.
I'll help answer those.
Thank you. Next slide then, please, Matthew. Oh, this is where I'm going to ask for a little favour now, if possible, for everybody on the webinar. If you have found tonight's webinar useful, we would really, really appreciate if you could spare just 1 minute to leave us a Google review. If you scan the QR code on the screen, it will make it nice and easy. as an independent local business, your reviews do make a huge difference to us. Not only does it help other landlords find us, but it lets us know that really the time that we put into evenings like this, providing information and support, is genuinely valuable to you. So we would really, really appreciate if you could leave us a review. Thank you for your support. And I'm going to leave that for just 10 seconds, just in case anybody wants to scan it.
Do that there. So I'm now going to just pick up and complete with EPCs and HHSRS. What does that mean? Energy Performance Certificates and Housing Health and Safety Rating System, because these are changing. So
next slide, Matthew.
Next slide, please. Okay, HHSRS. I'd mentioned before, it's getting easier. There's now more banding. So therefore, from that point of view, again, it's easier. The categories are still as they were. And again, this has been around since 2004. This is not new, but they've just made it easier. I think from my thing, it was, if I looked at it, logic would tell me that if I fell out of a ground floor window, I'd hurt myself less than if I fell out a second floor window. But there were ratios and formulas to actually work this out for everyone. It was that complicated. Gone. So you've still got category 1. So category 1, hazards, mold, damp, that sort of thing. Local authorities must take action. Back to the enforcement notice. And category 2, medium, discretion to act. Discretion to act means they're in your property. Going through the checklist, be aware. So it's been made easier to actually work out. I think it's a good thing because it's quite clear. If there's a bad property, it's a bad property. It needs to be sorted. But there was this sort of like, well, is it not? So that's really the difference with HHSRS.
Next slide, please, Matthew.
And then on to EPCs, Energy Performance Certificates. Now, this is not the one that was shown at the Lettings Council, just because I was told not to take a picture, so I didn't. AI has sorted this out for me, so very kindly. So EPCs, I have been saying for quite a few years, don't do anything on the EPC until we know what is happening. What we know at the moment, at 2030, all tenancies, we don't know where it's going to be, all tenancies will need to be an EPCC. Now, you've got chap Ed Miliband driving this through. He may or may not have a job by the 16th of July, so we can see what's going on there. However, the actual design of the EPC and the matrix of the EPC are changing. There will be really a case of what you have at the moment will still last 10 years, so don't worry from that point of view. However, if it says 2030, it's got to be a C, the thing that they will be looking at is fabric performance. It's not the whole thing. So basically, you've got various heating systems, smart readiness. Everything will rely on fabric performance. Now, EPCs and the way it's been worked out have changed. Is it 2 or 3 times, Steph, over the years?
3, I think.
Three times. So the way they've actually worked out the matrix does change. So if you are worried about this, again, let's have a chat, because it isn't a case, just do not follow what is on there. There is no way, if you've got a Victorian terrace house, you are going to actually be able to dry line it, to bring it up. So there are alternatives. Basically, we work very closely with some local domestic assessors, so we can actually get this moving forward for you. So whereas I've said before, don't do anything, I know my answer now is start thinking about it, start thinking what it's going to cost. There is a level of spending more than £10,000, and that spend started last May. So there is a level that if you go over that level, you will have an exemption. We understand there's going to be quite a few exemptions. Again, we don't know, but this is a sort of like really just showing you that things are changing. So don't think it's just going to be as straightforward. 2030, it's a C. If you've got a D now, there's going to be a problem. There are ways around it if you've got good properties. So I think really that's it on the EPC side of things. Next slide, please. Which I think is going to be making Dax Digital, and it's over to Matthew, who's hidden away.
Look at all these presenters tonight.
Lovely. And you don't get to see my lovely face, unlike the ladies on the screen, because I'm doing slides and our system gets confused. So making Tax Digital, you'll see down there about halfway down, free until end of June 2026. This is the service we're offering our current customers. Well, the end of June is, you've got about 5 hours to get in with that offer if you want. But seriously, as of the end of June, you have, if your income is over £50,000 income of combined rental and self-employment income, HMRC are going to expect you to do quarterly returns on your tax. If you haven't got a system that does it for you, you'll either need one or get your accountant to do it. Many people, I think, are just going to use accountants. We set up our system so where we manage a property and collect the rent, our documents are automatically converted to be HMRC ready for customers who choose that part of the service. So really part of the advisory, because most of the people on this webinar are self-managing. If you don't already have any visibility on what you're doing for Making Tax Digital, I suggest you get some, because you really don't want to be in trouble with Taxman. He can be quite mean. So I would suggest you have a look. If you're currently working with us and we collect your rent, if you haven't considered using our Making Tax Digital service with the owner portal, maybe you need to get in touch with us and we will do so. 'Tis all on the fun of tax.
Nigel has put in the comments, was this not for the year 24 to 25 income?
Yes, lovers of detail, Nigel, you clearly know your stuff. So the 50k is a threshold that the government decided, but they were going to look back at your self-assessment for the 24-25 year to decide if you hit 50k. Next year, the 50k drops to 30, and the year after, 20, or they're hoping for lower. So if you're not already crossed the threshold to Making Tax Digital, within 4 years, you're going to be. So you may as well start getting yourself lined up already.
And this is, I would agree with Kate, what you were saying there. Actually, you'll most probably find a few receipts that you didn't even think of. So I think that is it. That we have come to the end of our presentation.
Can we go to the next slide, Matthew,
Oh,
rather
right.
than that one? Because the next slide's got the QR code. I think it will be there we go, better to end on this, because again, obviously I know that this was for self-managing landlords. We've got the offer of the advisory service, but if you do have any other questions, I know Yvonne had one for HMO. Please
put the share offer back up again if
so we've
people
got
need it.
Offer or the QR code, even if you're not interested in the advisory service or you just want to speak about something. We mentioned the buy to sell keep calculator. There's been quite a lot floating around this evening, but if you do have any questions, please just book a call. I would be delighted to have a chat with you.
Okay, well, we've got 5 minutes.
Look at that.
I'm not sure. That's amazing.
It's amazing we're on time.
It's amazing. So while I say thank you so much to Kate for all that information, that is absolutely phenomenal and really, really, really helps. I would like to thank my co-host Steph for basically putting it all together, talking to everybody and putting the data together so that we can go, right, these are the questions we need to deal with because of this. And he's not here, but I would like to thank also the chat pushing the buttons.
He's been a brilliant scroller for the slides, and thank you for your slide on Making Tax Digital, but also thank you, Maxine, as well.
Yeah, pushing buttons. So there's no more questions. So I'd like just to thank you very much for your time. The next webinar that we've got set is for April, for God's sake, woman, is for October the 14th. So we may have that as a webinar, we may have that as a seminar. We don't know yet, but basically we've set the date, and that's the most important thing. And there will be a link to actually get your name down for that one. So thank you very much. Have a lovely evening, and we will see you later.
Take care. Have a good evening.
Cheers.
Take care.